You're listening to the Unlocking Africa podcast.
I am the Group Global Lead and Executive Chairman of Development Associates Link International. I realize that investment readiness is one of the key challenges because there are a number of requirements for a company to be ready for investment or external financing to come in. That is what we talk about when we're talking about patient and affordable capital, that it should be long-term and it should be affordable. This also gives confidence to the investors who are foreign investors, but also national or local investors.
Stay tuned as we bring you inspiring people who are unlocking Africa's economic potential. You're listening to the Unlocking Africa podcast with your host, Tessa Adamu.
Welcome to the Unlocking Africa podcast, where we explore how we can unlock Africa's economic potential in the 21st century. Joining me today, we have Dr. Henry Clark Kisembo. Welcome to the podcast. How are you?
Thank you so much, Tessa. I'm very fine, thank you. And how are you doing?
I'm very well, thank you. And thank you for joining me today. I guess today we're going to be looking and discussing the MSME funding gap, which is quite exciting.
Yes, sure. That is really quite exciting and interesting. Yes.
So let's get started, Dr. Kisembo. Could you give us a quick introduction into who Dr. Henry Clark Kisembo is?
Yeah, sure. Dr. Kisembo is a seasoned entrepreneur, a digital finance expert working within digital economies, enhancing investment and financing for MSMEs across different sectors, based out of Kampala, Uganda, but working across the global south. That's Africa, Latin America, Eastern Asia, and a part of Eastern Europe. So I am the Group Global Lead and Executive Chairman of Development Associates Link International. That is DALI. Thank you so much.
Fantastic. And as we said, we're here to discuss the MSME financing landscape. So, Dr. Kisembo, let's start by setting the stage. How would you describe the current MSME financing landscape across Africa today?
So, for those who may not be in the know, MSME is the micro, small, and medium enterprises, which is MSME. And the financing landscape is more of access to finance for investment or to start a business, grow the business. The landscape as it stands right now is evolving because Africa is an emerging marketplace. And the fact that it has been so reliant on government support, government subsidies, which comes in as external finance through government. But now MSMEs are beginning to attract foreign direct investment in different ways. So this is largely because of the Africa Agenda 2063, which has banned the exportation of raw materials, because history has had it that raw materials are exported and then they return back very expensively, maybe by 3,000% finished products. Right now, Africa, the different countries have to process, manufacture, or refine, and then export finished products to be competitive on the international market. And that calls for a lot of investment and financing, because Africa has not really developed that much to have high-scale processing facilities, manufacturing facilities, industries, the infrastructure, refineries. But with the now evolving trends, that is beginning to get attracted within the continent. Thank you.
Thank you for sharing that. You mentioned that MSMEs are beginning to attract investment in different ways. I know we still have a long way to go to where we hope to be in terms of the investment available to MSMEs. So from your experience across both public and private sector, what would you say are the main challenges preventing MSMEs from accessing patient and also affordable capital?
Yeah, thank you so much. So Africa has predominantly been having MSMEs within the informal sector. That when you look at the informal sector, is almost 86%, and the formal sector is about 14%, which means that when you're in the informal sector, you're not formalized. You could be registered but not compliant with all the different standards and requirements towards what the investor or financing entities need. For example, it's tax compliance, certification standards for products that you produce, the packaging. You realize that investment readiness is one of the key challenges, because there are a number of requirements for a company to be ready for investment or external financing to come in. For example, governance issues, tax compliance, formally registered, trading compliance, ISO certification. So this readiness, MSMEs have been doing business, but not really 100% compliant to that. Another thing is that since the structural adjustment programs in the 1980s, which predominantly was privatization of government corporations taken over by the private sector, there has been government subsidies, support from donor entities, and also other concessionary grants, which now has drastically reduced by 75%. And these were paying for the business development services to ensure that these entities really are compliant. Now, you find that when they're asked to pay for services such as business development services to ensure that they are compliant with the global standards, the regional standards, with standards required of them, they are reluctant towards paying for those services, because initially they were getting them through government subsidies and donor financing. However, slowly by slowly, that is getting to change. Maybe thirdly, I would say that the infrastructure setup, because from production to consumption, there is a number of areas that need to be fixed. The infrastructure, for example, the roads, the bridges, the logistical supply chain, storage facilities, all these have been really lacking. And even those that exist have depreciated, which is a big gap within the ecosystem of the MSMEs. Finally, I would say that the tax regime on the African continent is really very high because of what I talked about, that most of them are within the informal sector. So those that are formalized pay heavily on taxes to cover up the tax base. Ironically, foreign companies which come to establish on the continent are given tax holidays. For example, 5 years to 10 years. Indigenous companies don't enjoy such benefits. So competitiveness becomes a very huge challenge because they have to incur taxes, and yet they are competing with foreign entities that have gotten tax regimes or tax holidays as an attraction. Thank you so much.
Thank you for sharing that. So if we look at your personal experience, you've worked for institutions like the World Bank, USAID, and African Development Bank. Do you think the current financial architecture is designed to truly serve African MSMEs, or is a fundamental redesign needed?
A fundamental rating is needed. It is already taking place, but at a very slow pace because of some of those challenges that I have highlighted. But a fundamental change and a rethink is really required within the MSMEs space and spectrum, such that they start to think about alternative financing. For example, beyond USAID, beyond World Bank, beyond, say, the African Development Bank, what other financing mechanisms are out there that are flexible, adaptable, and can align with these MSMEs? But also, the mindset and attitude of the MSMEs also need to rethink that gone are the days of subsidies, getting discounted money or grants or donations, and now they have to factor into their financial models and business model costs towards business development, towards support, towards marketing, and not only marketing within their jurisdiction or country, but beyond countries, regional and globally, and also get international partnerships to be able to compete at the global level. So there's really a fundamental rethink which is beginning to take shape. Not yet really there, but at least there is a start for now.
You touched on something important there, which encompasses the business development angle of growing a business so it can compete. But in order to compete, also, we know it requires capital to invest back into the business. And I know the term patient capital is something that is gaining popularity in Africa, especially in the development circles. So how would you define patient capital in the MSME context?
Yeah, patient and affordable capital is that capital which is not short term, for example, 3 years, 5 years, because the MSMEs are reorganizing their governance, their structures, their supply chain, distribution chain. There's a lot of reimagining and rethinking within the MSMEs. So this capital we are talking about is supposed to be patient, say, for example, 10 years, but also supposed to be affordable. Because if you're going to have an MSME accessing capital at 36% per annum, that is 36% of what business the MSME is involved in is gone as interest from financial institutions, which are predominantly the ones that offer this capital where they run to. So when we're talking about patient and affordable capital, is long-term investment or capital injection, but also which should not be a limiting factor because of the cost. For example, in the global north, you'll find that MSMEs getting investment or capital at almost a quarter what African MSMEs are getting the capital for. So that is what we talk about when we're talking about patient and affordable capital, that it should be long-term and it should be affordable in terms of not killing these MSMEs for them to survive either early stage, growth stage, or consolidation, and not die along the way because the cost of operation versus the return on investment is really skewed. It does not balance out. Thank you.
With this in mind, and I guess the work that you do at Dali, can you share an example where patient capital has successfully enabled an MSME to grow, perhaps through, say, blended finance or cooperative models or value chain financing?
Yeah, sure. For example, we've been involved we as Dali, in one, attracting investors because we source them out, those that are known and those which are silent, but we get our algorithms and run through and get to know where they are. Some, they are referral. So the starting point is to understand what are the capital needs of the MSME. Then, instead of getting products off the shelf, for example, from financial institutions like banks, we structure financing and capital or investment or we blend it in that it's customized to the needs of the MSMEs. Take, for instance, in the agriculture sector, the maize value chain. We have worked with the maize value chain, the dairy value chain, the tea value chain, working right from the farm gate, where production is, where the crops are grown, work with the whole ecosystem, the transportation, injecting capital to enhance transportation, and then the marketing, storage facilities, packaging, but also the cost of getting standardized with certification, and then go to the market. When you go to the market, there's of course a lot that is involved there. One is utilizing different channels to communicate the availability of the end products which have been now processed or manufactured, communicate locally, communicate regionally, for example, East African community or across the continent, but also internationally. So the agriculture sector, we've been in that. We've worked with the mining sector. There is a lot of natural resources, oil and gas, minerals. So we've supported this because initially they've been doing it at very low scale, artisanry, and now supporting them through blended finance or alternative financing with equipment to one, increase production, but also get out of the artisanry kind of operation, because supply should meet the demand. Then we go out and support these entities to also source for markets globally. And those are the examples of the so many that I could share with you. We are in real estate, supported a lot of real estate. We are into the infrastructure development, roads, railways, water, transport, for example. And what we're doing is structuring this financing, supporting them with the financial models, and then also negotiating with investors to ensure that the capital is really affordable and is going to be patient to run the MSME through the different stages that it has to go through and be profitable, to be sustainable for a long time. Legacy companies, basically. Thank you.
Welcome to Verto Corner, where global growth meets smarter regulation. Today, we're diving into exchange control, the silent engine behind compliant cross-border payments. Here's Erica, Verto's regulatory exchange control manager, to explain how it all works. Over to you, Erica.
Hi, good morning. I'm Erika. I am the Regulatory Exchange Control Manager at Virto in South Africa. So what I've noticed is that the SARB is modernizing its exchange control framework, and we at Virto have to keep up. Increased monitoring by the Financial Action Task Force is seen by many as a blocker, but it should be seen as an opportunity to address anti-money laundering and terrorist financing shortcomings in South Africa. And in the same light, the South African Reserve Bank should not be seen as a hindrance to cross-border trade, but rather a vehicle that facilitates smooth and legal cross-border activities. Virto in South Africa, we ensure compliance with the complex exchange control systems of an emerging market like South Africa through a holistic approach that combines regulatory compliance, expert guidance, and advanced technology. And this system is designed to navigate the specific challenges in emerging markets, which, as we all know, have their own unique regulations aimed at controlling capital flows and stabilizing their local currencies. Key components of Virto's compliance system includes a comprehensive compliance framework. We ensure that we obtain the correct local licensing and partnerships, and we provide expert guidance when it comes to exchange control and compliance-related matters. In addition, we have a platform that allows for simplified and automated processes.
Thank you for that information. Just a quick question to follow up to what you mentioned. How does Virto's exchange control system help clients stay compliant, specifically in emerging markets?
So Virto's framework, it integrates both international standards and local requirements. We have a dedicated compliance team with a presence in South Africa and the United Kingdom. These teams, they monitor and interpret changes to exchange control rules and compliance in South Africa. And obviously, we continuously strive to improve our compliance programs, policies, and procedures, as this is not just a regulatory requirement, but also part of the Virto framework. We've secured local licenses, like the FSP license with the Financial Sector Conduct Authority, and we have existing partnerships with banks in South Africa. One of these banks is Investec, one of the biggest banks in South Africa. And with regards to exchange control specifically, like I mentioned earlier, we provide expert exchange control guidance to help clients navigate the intricacies of exchange control. We have a team of exchange control professionals who offer advice on complex cross-border exchange control issues for businesses of all sizes, from the smallest SME to the largest corporate. And in addition, this team can assist with the accurate submission of exchange control applications to the Reserve Bank. Obviously, the application would still be submitted by the client. However, in my opinion, the rulings can be somewhat ambiguous, which is why the advice from an exchange control specialist can be a lifesaver. In addition, I think Virto's motto is to simplify FX. We start by simplifying compliance. By using trusted RegTech tools, the platform automates compliance checks during our onboarding process, but also exchange control checks during our transaction monitoring process. And the system's data management capabilities allows for the quick generation of reports, which can become a requirement, for example, if the company has an order due or for any kind of application to the Reserve Bank, which can ease the administrative burden on businesses. And by combining these elements, we not only ensure Virto's adherence to local laws and rules, but also provide our clients with the necessary tools and support to confidently conduct cross-border transactions.
From your work, what recent regulatory changes in South Africa are shaping the payment space?
Some recent changes or developments which we have picked up in the exchange control environment, firstly, one that has been implemented already is that the Reserve Bank has introduced changes to how cross-border payments are handled within the Common Monetary Area. The CMA, which includes South Africa, Namibia, Lesotho, and Eswatini, Previously, transactions between these four countries were classified as electronic funds transfers or domestic transactions. But after the reclassification, these payments are now considered international transactions or cross-border transactions with stricter compliance and tracking requirements. Now, this payment scheme that was initiated by the SARB, it's specifically for the SADC region, but I see it as the SARB starting to modernize the local payment system while still complying with FATF recommendations. A second change or new implementation from the SARB, which I'm excited about because it means that they are open to change, is that the SARB has reduced the red tape for South African companies, where the South African company no longer has to obtain prior approval from the Reserve Bank to remit royalties and fees to related non-resident parties. So not to put the cart before the horse, but this does signal for me a change that the SARB is considering moving away from a negative list where all capital flows are restricted unless permitted, towards a more positive list where everything is allowed unless it's on a list of exceptions. Now, this hands-on approach from the SARB is welcomed as it aligns with Virto's mission to modernize cross-border activities and just make life easier for our clients in general. Thank you.
Big thanks to Erica for pulling back the curtain on exchange control. If you're expanding into regulated markets, check the show notes for tools and guidance from Virto's compliance team. See you next time on Virto Corner. And now back to our interview. You mentioned negotiating with investors. So how do you balance investor expectations of returns with the long-term nature of MSME growth and development?
Thank you so much for that question. There are investor expectations. However, we look at margins. And to us, because there are many, they come in terms of venture capital, impact investment, they come as development finance, concessionary financing, non-recourse debt. And we're like, okay, here is what happens. That let us look at it that you're not investing and in, say, 5 years you want to pull out because the company is still growing or transitioning. However, you're pulling out and you're looking at pulling out with, say, 40% of the investment that you injected in. Why don't we change that and we work out structured financial models whereby we look at low margins on profits, but increase production such that there are volume production, volume sales, which will get back in the long term to what your achievements or what you're looking at, what your objectives, what your expectations are as investors, that you're looking at getting the best fit for return on investment. But a payback period has to be addressed. And the way it can be addressed, and also these MSMEs to gain growth and also sustainability over generations. We look at lower profit margins, but higher volumes on production. Then the equation comes back now to the same, that they are beginning to understand, investors are beginning to understand that Africa is an emerging market. There's abundance of opportunity. And if you're patient with these MSMEs, you're going to get high returns over a longer term period than coming in and you need your money back or sell out as fast as possible. Thank you.
In addition to investor support, it's essential to have policy, regulation, and institutional support. What kind of policies or frameworks would you say are most effective in enabling MSMEs to access affordable finance?
Let's start from the financial side. So, for example, the fiscal and monetary policies of a country. There is money coming in, and this money has to be regulated so as to avoid inflation, but also such that it is monitored to avoid illicit money or laundered money coming in, which can flood the marketplace. But also policies around private sector growth and enterprise development policies. These are policies which support and guide the MSMEs on how to move from one stage to the other, the do's and the don'ts, but also policies on vetting the money or the investment. Where is it coming from? The Financial Intelligence Authority, for example, central banks in all countries are involved in vetting of this capital, vetting the investors, and these policies are working out because that now assures the MSMEs that they're not dealing with either scams or illegitimate sources of income which are not traceable. But also, in return, they provide what is expected of what the investor expects to get in return, while not killing the enterprises or the MSMEs. So such policies really exist. Some which have become a bit old, say which were designed 10 years ago, are being reviewed. DAL is part of those entities that is so actively involved with different sectors in reviewing policies.
Thank you for sharing that, Dr. Henry. In addition to that, how can African governments work successfully with central banks to create a more supportive financing ecosystem?
The central bank, which is obviously an arm of government, which is the overseer of finances in Africa, has a role. One is to manage the flow of monies coming in and leaving the country, because there should be a balance. If there's a lot of capital outflow leaving the country, then the country, at the end of the day, GDP is going to be low because a lot of money lives in foreign exchange. You have to turn the local currency into foreign currency to be able to go and purchase equipment. But if some of these companies are now working with government, the central bank supports and promotes these companies setting up in the country such that equipment is procured within the country. But also the central bank is one of the mandated entities to look at the financial intelligence to avoid inflation, to curb inflation. For example, if production is so high and the demand is low, prices go down, but also to avoid prices going so high, which means that inflation, because inflation eats off a lot of what the company has sweated for. So that is managed in that way. The central bank comes in and says, no, the interest rate, this is base. And inflation, this is the amount of money that should come into the country because of absorption issues. Yeah, so the central bank and government are really working hand in hand, especially with the Ministry of Finance, Planning and Economic Development in different countries, the Ministry of Industry, Commerce and Trade. So the government is playing its role, though at times it becomes a little bit slow because review of policies and enacting policies is also a process that needs to be speeded up, considering the fact that we are in a technological era where everything is moving so fast. So they also have to pull up their socks and move according to that pace. Thank you.
So leading on from that, in terms of we are within a technological era, we're seeing fintech, digital innovations that have increased financial inclusion and access. You have deep experience in digital finance and fintech. How have you seen technology recently expand access to capital for MSMEs?
Yeah, so if I've got the questions well, is that with the advent of financial technology companies, it's no longer a monopoly of banks to be the ones where MSMEs should be running to get access to finance. Fintechs are also enabling the movement of money, of course, with the regulation of government, movement of money from different investment vehicles into the country with ease and at a fast pace. But also, fintechs, so financial technology, is helping in-country movement of money. Instead of taking 4 days for a transfer to be made, a payment, it now takes just a few hours and it is done. But also facilitating cross-border payments, because with financial technology, these fintechs support integrations. Integrations, I mean like open access program interfaces, open APIs with different financial institutions, with savings, cooperative organizations, with microfinance institutions. So there is a lot of integration, even both within the country and cross-border payments, which means that technology is reducing what used to be a long wait of 4 days to about 2 weeks waiting for a transfer of money or a payment. Right now, it is becoming more of within 3 hours. A transaction has been vetted and it has been conducted. So that is a good thing about technology. And more to that is, I would say that with evolving technologies and confidence being built through sensitization, like our work at Dali, we sensitize banks, we sensitize savings cooperatives, we sensitize the business owners, and also oversee, because we also handle technology aspects, oversee the security. So there is agency banking, which started way back about 5-6 years ago, that the intimidation MSME owners used to face going to banks, the long processes and paperwork. Now, with agency banking, they don't have to go travel 40 miles to go to a financial institution. The services are brought closer to their businesses through agency banking. What agency banking means is that this is a third-party provider of the products of financial institutions, including investors. I'll give our inner Tidali example that we are a non-bank investment and financing entity. We have that component, and we have the technology, and we enhance technology support towards other entities. So we have seen a lot faster growth in different sectors because services are taken closer to the business owners, and we also know what their needs are, what the gaps are, and what their challenges are that they are facing, such that this also gives confidence to the investors who are foreign investors, but also national or local investors. Thank you so much.
I think from this, it's clear that digital finance and credit have expanded financial access dramatically. What lessons can we draw from their success and also the shortcomings?
that technology is here and has to be embraced. Sensitization, public education, and creating awareness amongst the different value chain actors and ecosystem actors in business within the MSME space has to be created, supporting these entities in business development and investment readiness to understand the expectations of where the capital is coming from, alternative financing, and the different channels of financing. They need support, which support is internal stakeholders of the company have to start understanding that they are plugging into a more broader aspect of business than just their neighborhood. It is more of plugging into the country, the regional, continental, and global marketplace. However, there is also a need to address issues around financial crime. For example, how to vet real investors or real capital and where it's coming from. We use technology to run due diligence on this capital, but also to turn on a red flag should we suspect potential scams. When they start asking for monies before you even see the result, you invite them to come to a country to see the company they're going to invest in, they are not showing up. We point out a red flag. We can't work with such an entity. And also inside their inner syndicates, I would say, within the MSMEs, but also the financial entities, that we need, and we are doing it, to look at forensic audits. Forensic audits is not just giving an opinion, looking at books of accounts and giving an opinion, and that's an audit. No. We do forensic audits, which includes intelligence, investigation, data-driven information, and analysis. And then we can now find where the gaps are, say, for example, in financial models, for example, in books of accounts, the profit and loss, the balance sheet, the financial statements, and also the business operations within the supply chain, distribution chains, logistic aspects. So a blend or a hybrid of human and technology is required, one, as an advantage to enhancing growth of these entities, but also to curb financial crime. So we work with the different agencies across the continent that are involved in investigations. We also empower and train them on these forensics. When we talk about forensics, what are we talking about? We're talking about a more deeper analysis, which is data-driven, to reach a conclusion for a decision to be made. Thank you so much.
You touched on something key, which is the issue of scams and financial crimes. I know that one of the challenges we still have with digital banking in Africa is digital identity. So how can eKYC systems and alternative credit scoring be used to bridge the trust and information gap that, often limits our digital finance systems?
So one, I should say that credit really goes to the countries that have started or have already implemented. Digital financial services were predominantly driven by telecom companies, and telecom companies which are regulated by Communication Commission. Now, communication commissions or regulators have no hand in the business of finance. But we reached a point I remember when I was serving as the chairman of the Mobile Financial Services at the Central Bank of Uganda, we looked at the financial inclusion strategy and we recommended that no, there is no way you're going to hold a communication regulation entity accountable on loss of money because that is not within their jurisdiction. So separate telecommunications. It can be a group, it maintains its name, but they should be separated such that the fintech side of it, the financial technology side, is also a sister company which is registered independently and is under the oversight of the regulator of financial business or market. So, for example, the central bank, reserve bank, national banks, and that has been really a great achievement. But also, most of these regulators have been looking at commercial banks. But remember that with the advent of technology, there is other financial service providers. For example, savings and cooperative organizations, the microfinance institutions, and also the money lenders. So even these are regulated either by the central bank has an arm that regulates this, or a totally separate entity. For example, a country like Uganda has the Bank of Uganda, which regulates the banks, commercial banks, and then has the Uganda, what we call the UMRA, like the Uganda Micro Financing Regulatory Authority. So this is very important in that it enhances regulation. But also the country and many countries have started the whole aspect of national identities or national identification. What this means that every citizen and non-citizen of the country must have a national identity which they have captured the iris for facial recognition. They have captured biometrics of each individual. And then also, if they are foreigners doing business in a country, then these foreigners have alien identity cards. Okay? So that is one way of saying that it is intentional, purposed to mitigate, circums, but also regulate any intention towards financial fraud, and also identifying it before it happens, or if it happens, it is investigated at a more faster rate because there is traceability. And this also goes for credit scores, that with many apps coming up, there are traceability, many apps on financial services, but also financial services transactions happening. And also credit score is initially it was, say, the Credit Reference Bureau, but now it is opening up. Countries are opening up to entities that are specialized to having monitoring the credit reference. For example, if you have bad debt or you run bankrupt, all that information is being captured and shared under a single system.
Fantastic. This is great, and I guess it sets a strong structure going forward for the future. So if we look at the future, looking ahead to, say, the next 5 to 10 years, what emerging trends, such as, say, green finance, digital currencies, blended finance, what emerging trends do you believe will shape the future of MSME financing in Africa?
So the future is bright. For example, the incoming of climate finance because of climate sensitive technologies that are being utilized to boost business performance, green finance to protect Mother Nature, but also the whole ESG, the environment, social governance protection, then different alternative financing mechanisms for these MSMEs. The future is really bright because one is that the MSMEs are gaining knowledge and information about what they didn't know in the past, but technology is enhancing that. They can find information very fast and also verify it, but also the investors who are bringing in this alternative financing, and those I'm talking about external investors, but also we are encouraging local investors, high net worth individuals to invest in MSMEs. They are also now opening up because they are more informed with more accurate information. So when we are looking at alternative financing mechanisms, all those are welcome because the ground is being set and the future, say 5 years, 10 years, we are looking at SME evolution, which has already started, but also a lot of collaborations and partnerships with public sector, which is predominantly government, the private sector collaborating amongst themselves, and also civil society.
So, as we wrap up, if you could share one key message with African policymakers, investors, and entrepreneurs about unlocking patient and affordable capital, what would it be?
The message would be that there is a need to embrace technology, for example, artificial intelligence, because of the benefits that it brings, but also a need for flexibility, dynamism, adaptation, and also acceleration of processes. For instance, policy making processes or regulation and law making processes. So this will enable everyone to benefit, the MSMEs, the supply side, the consumers, and also the financing side.
Quote of the week.
As people, we often have quotes, mantras, African proverbs, or affirmations that keep us going when times are challenging or when times are good. Do you have one that you can share with us?
Yes, I will share two. One is a proverb that goes, when you fall down, you have two options. Either to stay down, lament, the rains will come, the sun will come, you'll keep down, but not moving. Or stand up, brush up the dust, learn the lesson, how did you fall, and then move ahead. That is one. The second one is from Ubuntu. I'm sure that you have heard of Ubuntu,
Yes.
which has been an ideology of Africans and also Pan-Africanism, that I am because you are, and you are because I am, which means every individual, every entity is important and needs each other in order to grow and thrive.
Fantastic. Beautiful way to end today's conversation, Dr. Henry. Thank you for sharing your deep insights and experience with us today. It's clear that unlocking affordable and patient capital for MSMEs is not just about finance, it's about building ecosystems that encourage trust, innovation, and also long-term growth. So yeah, fantastic. Thank you for joining us, and it's been great to have you on the podcast.
Thank you so much, and thank you for the great work you're doing, and thank you for hosting me. Thank you so much.
Thank you to everyone who has listened and stayed tuned to the podcast. If you've enjoyed this episode, please subscribe, share, or tell a friend about it. You can also rate, review us in Apple Podcast or wherever you download your podcast. Thank you, and see you next week for the Unlocking Africa podcast.